markets are crashing. This could be one of the biggest red days ever. We'll break it down for you. Welcome back into the show. I want to start off with what we think is going on. And part of this is this war between the U.S. and China when it comes to tariffs. This, of course, is the S&P 500 falling 70 points. This is in reference to President Trump publishing that China is going to get hit with more tariffs. So something is pissing him off, and he is going head to head. In fact, so much so that he's going to hold a conference later today to really go into this. But while that is happening, 200 mil liquidated from the cryptocurrency market in the past 15 minutes. This could get really bloody, guys, going into a very bloody weekend where all of this plays into one thing, and that is the message that the United States is sending to China. Let me play shot one.
The president posting a lengthy post on social media here, but in it, he's threatening unspecified retaliation against the Chinese side. He also seems here to cancel his scheduled meeting that's coming up with President Xi Jinping of China. The president here saying this was a real surprise, not only to me, but to all the leaders of the free world. I was to meet President Xi in 2 weeks at APEC in South Korea, but now there seems no reason to do so. The president going on to say that the Chinese letters about rare earths were especially inappropriate, and that this was the day that, after 3,000 years of bedlam and fighting, there is peace in the Middle East. I wonder if the timing was coincidental. So the president here objecting not only to the Chinese move on rare earths, but to the fact that it appears to have stepped on the news of his apparent peace agreement with Israel and Hamas yesterday. We'll point out, Carl, that just if you look at the tone of this, it's a lengthy, and I think you could characterize this as an angry response to the Chinese, but it's also a non-specific response to the Chinese. He's saying there seems no reason to do so with the Xi meeting. So it seems as if that meeting is being canceled, but it's not actually canceling that meeting. And he's also threatening a whole host of retaliations here on areas that the United States has monopolies on, but not specifying which ones, threatening a massive increase in tariffs, but not specifying which ones. So I think you could put this in the category of presidential venting right now.
All right, well, you call the presidential venting a taco, and that is Trump always chickens out. The point being is that the negotiations that he's dealing with, these are all ploys, guys. They're all ploys, and they are playing into the markets. It creates volatility. It opens up opportunities for those who are ready to take it. And that's probably what's going to happen as he starts to air what this issue is at 3 to 5 p.m. today. I guarantee he's going to be late, so it'll probably be after 5. But markets are looking for more detail on how this tariff statement will actually play out. I anticipate it's just saying he's not happy with Xi Jinping, and he's just going to sit there and push it away in terms of trying to get a deal with China. And again, this is a problem, I think, around negotiation tactics that we've seen with President Trump and his administration with the Chinese. So this is all playing into it. You've got a lot other issues happening, and that is around the potential, or I should say, the potential opening of the government, because it's still closed. And remember that no King's Day, there's protests planned across the nation. This is to oppose the Trump administration. That'll happen on October the 18th. There could be some possible alignment here where the Dems could be kind of coming in and saying, hey, we're going to kind of wade in on this until October 18th to get in and kind of capitalize on that news that's going to be hitting with these protests. And I don't know, this will be interesting if they're willing to do that, the Democrats. I know that right now it's an impasse between the two, so all of this, I think, even though that has not had as much of an impact in terms of the government being closed on the markets, but these moves on tariffs, this has an impact. I really thought we'd get a little bit more of a market pump with the news on what's happening in Gaza and the Middle East. But right now, I think the tariffs on China are the one that will affect so many companies. If you look at the government shutdown data, right now, everybody's pointing at that after the 15th. That looks to be the case. Once we go beyond that is where it gets a little bit dicey for a lot of different people here in the United States. I'm not for this. I think the key here is they got to sit down, try to figure this out, because this is only going to make things worse economically, and that's the thing that you cannot do. Now, the bullish news going into the market, and I think there are some bullish news. One of the things I'm watching right now, iTrust Capital, they hit $15 billion in crypto transactions. That shows me that, and of course, iTrust is a sponsor of ours, but that shows me that what we're seeing now is people looking at long-term potential holdings. So going into a crypto IRA, those kind of things. That much going into crypto transactions over this last month, pretty impressive as we continue to see that area grow. The other thing that is happening, of course, is the market structure bill. And of course, talks are now stalling over this leaked Democrat DeFi proposal. And let's be honest, this is politics in general, but in reality, I believe this is the banks versus crypto. And that's what it boils down to. The strongest lobbyists out there have been putting this out there in terms of trying to derail DeFi and the future of where crypto is going, because they're trying to get in a position to be in play in this market, and they currently are not. Let's go to a clip here. This, of course, is Charles Hoskinson from Cardano. He kind of hits on this very point. Take a look.
And finally, the Senate Democrats have decided to issue their counterproposal. So I'll just go ahead and read this off. The plan would grant the Treasury Department power to create a restricted list of DeFi protocols considered excessively risky and could force an immediate halt to bipartisan negotiations on overall crypto market structure. Instantly dead. It opposes mandatory know your customer rules for cryptocurrency application front ends, including non-custodial wallet interfaces. In other words, every single wallet is basically illegal. All your browser wallets would be illegal. Thanks, Democrats. Developer protections would be removed, meaning every single person building DeFi applications is now a criminal. Congratulations. Thanks, Senate Democrats.
All right. So, I mean, the point is, yes, these are the kind of proposals that I think in many cases they know not what they do in terms of the Dems, but I think they're being directed by one clear arm, and that is the banking community and these lobbyist groups. So just remember, major banks are now collaborating on plans to joint launch a stablecoin initiative. Timing, interesting here. Of course, we see Bank of America, Goldman in there, some of the US banks, TD Bank, obviously UBS, Citi. Point being, guys, is that they have a lot to lose, and this is the only thing that they can do to try to slow this down. And if we do get clarity coming fast, they just want to be in a position to where they can compete. And I think that is the issue that really boils down. Now, Charles has been busy out there because now he's saying, yep, well, this will also start to circumvent the issue with Circle and Tether in terms of a monopoly on stablecoins, and this could soon break. I don't necessarily think that is going to be the case. I think we will continue to see native stablecoins on blockchain become and still be the dominant forces. Now, let me know what you guys think. Would you allow or would you hold stablecoins in your bank? Just put yes or no down below. I want to kind of curious on what that would be for you guys. And if you're not subscribed to the channel, make sure and do that now as well. Let's go over to a couple other points because I want to get in on this right here. And this is a point that you have to pay attention to around the government shutdown. There's a few things that puts the brakes on ETFs. That'll slow down the market. This could also push the market further into 2026. We've talked about that before. A couple of points they hit on right here. Just look at the altcoin ETF approvals, literally going from what we were getting to where we are now, because we aren't going to be able to get any until we start to get these regulators back in office. But the first wave of green lights was expected mid-October until everything stopped. And that, of course, is where we are today. Point being right here, industry analysts now estimate that once the SEC resumes work between 5 and 10 billion in capital could enter the market almost immediately on ETF launches. Now, people I'm talking to are saying that the ETF is, or the SEC is actually still doing a lot of work. So it's very possible that this could hit the ground running once that they open the government back up. So be on the lookout for that. We could see a lot more movement out there in terms of action. The other thing that's happening this month is October 21st. You've got the U.S. Fed hosting their Payments Innovation Conference. And remember, we've talked about this before. Chair Powell is going to be hosting this conference around the future of where crypto and AI is going. And I will grant you, there are going to be every banking lobby lead at this event and every banking representative that's talking about the future of crypto. Be ready, because there's going to be a lot that happens coming out of that conference. Now, the question is how does this play into the bull market? Is the top in? Many people would say the October 6th date, 7th date was the top if you're looking at previous cycles. Here's a clip that kind of goes into that. Take a look.
Dems, quote, the combination of continued economic growth, resilient corporate profits, and a supportive policy backdrop provides a solid foundation for maintaining a constructive stance heading into the fourth year of this cycle. Of the 7 bull markets that extended beyond year 3, all saw further gains during the following year.
I think the big takeaway for people is that it's very expensive to miss a bull market. You almost never recover if you sit these types of things out and watch from the sideline, or you're way underinvested, or you spend the entire time waiting for it to end, and too much focus on hedging, not enough focus on capturing that upside. But I think people need to have that context and that background so that they understand just because stocks have been up, that in and of itself is not a reason to say, all right, that's as good as it's going to get. I'm done now.
All right, now you've got conservative investors and you've got people out there that are willing to take the risk, because there is a certain amount of risk appetite that you have to have in this stage of a market. Tom Lee talked about this the other day in the sense that he still sees this on a very aggressive move upward. If you're believing those guys, now remember, a lot of these guys now have skin in the game. Tom Lee, of course, with BitMiner, an Ethereum DAT company, a digital asset treasury company. If you guys don't know what that is, go out do some research on that, because it has a lot of influence over Ethereum in general. And as we see the market start to flow into this, the real question is, where is the liquidity going to come from? Well, part of that is going to come in from a lot of capex that is starting to flow into businesses. And this could be another indicator that says, well, wait a minute, if we start to see this overbought position on capex, does that bring us back to these past bear market indicators going forward? Take a look at this clip.
Where do you stand on, we had Paul Tudor Jones on the broadcast earlier this week, and he made a comment how he thought we could be in October of 1999, which is actually not a bad place to be, because the market still, I think, had something like 40% to go from there. You just had to know to get off the train at the right time.
There's certainly similarities after living through that. Trying to time that, I have no idea. I do know that similar to that time frame, the amount of capex that was being spent was extraordinary, and we saw the end result of that. And the amount of capex today is quite extraordinary as well, defined as Oracle spending half their revenue, not cash flow, half their revenue on capex. Right. And Meta and Microsoft spending a third of their revenue. Hopefully it pays off, but those are big numbers.
I don't know how you trade what he said. I mean, Paul Tudor Jones. I mean, I was watching, but
I think what you do is it's like a Chuck Prince kind of situation. You're supposed to dance while the music is still playing.
Andrew, I know what he's saying, but
you got to find a seat though when it stops.
It's win-win. He was dead wrong in May and couldn't have been more wrong. And you pointed that out, because he said we're going to go to new lows. Right. Now his thing is, oh, something really bad is coming. But before something really bad comes, it's going to be unbelievably good for as long as 2 years. So possible. It's going to be, yeah, it is. But it's either you're covering, yeah, it's going to go much further, and you're also covering any time it could really collapse and be really bad. So what information are you really giving us? You can't trade that.
Okay, you're right. You can't trade that, guys. And if you're watching the mainstream, the reason you come to our channel is because we give you analysis on this media. And I believe that they're all wrong. We're continuing to get these cycle tops called. We're continuing to see this kind of innovation that is happening, whether it's the AI bubble or not. And if you believe that it is, then that is a problem going forward. I personally think AI is still going to be on an accelerated to zero. That's right. I think we're going to accelerate to zero in terms of cost of where that goes. And that will play into one of the companies that could get hurt on this on the backside is, even if you think about it, NVIDIA, if they in fact do continue to improve performance on these chips. So a lot of things playing into this. Bitcoin is going to be one of them as well. Supercycle unfolding. There are a couple of things that you could look at here. A couple of chart patterns are suggesting a 450 to 500. I don't go there. I don't necessarily believe that's right on target. Now, could this be over a long period of time? Sure. There is some volatility that kind of supports that. But other things, if you look at the breakouts now to potentially an all-time high around 126, this has all been done because of the resurgence in U.S. spot inflows, ETF inflows. And I think that's going to continue to support the mechanism for both Ethereum and also for Bitcoin. But I think the real critical thing here is going to be Clarity Act, and we're going to still see the amount of impact that we're going to have with the Fed cutting rates. I understand that many people say that's not really going to impact as much. I disagree. I think you are going to start to see real movement on liquidity coming off the sidelines into these markets when those rates start to see another sub 1 point cut, which will probably happen in early 2026. Sustained ETF flows through October and November. This is going to be a durable tailwind. I would agree with that. And listen, Bitcoin's trading at 117 here as we're recording this right now. A week ago, it was busting out into another all-time high. So is that an opportunity to trade? That's a nice volatility there. And Ethereum's getting ready to cut under 3K. So are we in a position, or under 4K, are we in a position where this may just open up another opportunity to buy in? I don't know. Let me know what you guys think in the comments if you are buying this dip as we talk. Spot Bitcoin ETF trading volume surpassed 1 billion in the first hour of trading. That should tell you something. Continued volatility on the way. Gold is booming right now. Mirrors a lot of what's happening with Bitcoin momentum. And of course, banks are buying in. This is getting crazy out there. It's only in recent weeks that gold has finally surpassed a real adjusted all-time highs. We already saw this. Silver, of course, cracked 50, retraced off of it. These are signs that either we are nearing a massive breakout or a flatlining of this particular market. And if you look at most people, because it's still very divisive between the analysts as to what's going to happen. Many bulls, many bears out there in the markets. Continue to watch how this plays out. Solana's ETF decision delayed. And this was set to go any minute now. But the interesting thing is Solana could actually end up kicking this off if we actually see the ETF approval once that we get the government shutdown over with. Because what we could get is a rush into the market. And one of the reasons you're going to see a rush into the market is because of this right here. That is these ridiculously low rates. Canary has come back with shots across the bow here going at 0.50 on their expense ratio and no cut of staking rewards versus Bitwise, our friend Matt Hogan over there, he's going at 0.20. And that was a big deal, but he's keeping 6% of the staking rewards. I got to get Matt on to talk about that. I think he's going to get a little bit more negotiated on this now that Canary is coming in. This is a big deal for these two to go neck and neck to try to win the Solana ETF, because this could be a big catalyst for not only Solana, but also for the market. So be thinking about that. Another catalyst leading the market right now, Kalshi just raised a $5 billion valuation. This is being led by Sequoia and A16Z, two of the top VCs in Silicon Valley. Remember, this is on the heels of Polymarket fielding offers for a $9 billion valuation. And of course, the deal that we already saw with ICE, with Polymarket, the owners of the NYC SE. So these two are going neck and neck, and it is now becoming a slugfest between Kalshi and Polymarket. I put out a tweet this morning, and it was kind of just a breakdown. These are the things that are really at stake here. Kalshi just went global with this deal with Solana, $300 billion on the raise, which is another $5 billion valuation if you consider that being the case. $50 billion annualized volume right now. And so far they're on 3x growth post-raise, and they're fully regulated. That's the one thing they have over Polymarket. Polymarket's offshore, regulatory uncertainty, but yet the U.S. access is opening up. I think that is the key here for Shane Copeland over at Polymarket to get this thing going. And $2 billion in terms of an investment coming in, and a leader in terms of the political prediction. And remember, 2026, huge political year in the midterms. Polymarket could come in and win this overall. Let me know what you guys think down in the comments. If you're not part of the Diamond Circle, get in right now. It's a great place to get additional content from me. I send out a letter each week that is great for you guys in terms of understanding where these markets are going. Follow me on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.